All right, this is a 10-year U.S. Treasury note video shot on Thursday, August 13th. Given the rally in the treasuries and the inverted yield curve and the talk of imminent recession and so forth and so on, I thought it would be appropriate to shoot a quick video just to keep you abreast of what's going on in the treasury market. We have a channel structure that you can see here that dates back to, really, it goes back to activity that incorporates the 2012 high. 135.15 was the high in July of 2012. That was really the post financial crisis high, if you will. Since then, we've been operating into this sort of wave structures that have played out over the course of anywhere from 12 to 18 months. And right now, we are in the process of approaching what is a significant overhead resistance area at 131.10 for the entire month of September. I'm sorry, August. And by the way, this is a monthly continuation chart. It does reflect the September contract right now. And then when the December contract becomes the high volume lead contract at some point in the month of September, the December contract will then so-called inherit these levels. And so just so you know, because I'm going to give you the levels for the month of September as well. This channel structure at 131.10 for the entire month of August drops to 131.08 for the entire month of September. So you've got information here that should play out for the next 5 or 6 weeks. And this is our ceiling, 131.10. It is an area that can absorb buying through the balance of the year and quite possibly through 2020. That's how meaningful this is. And from these price levels, the market can fall back and rotate south. Let me give you some of those. Let me take a look here. I'm moving around just a bit. There it is. All right. This is just plain, simple channel structure. Right now, we're not going to test that between now and the end of August. But in September, this ascending channel structure is at, and what do I have? I've got, bear with me here. Yes, 127.12. That is your support in the month of September. If we were to settle back below 127.12 by the end of September, the market has indicated a good annual high. I would then expect 2 to 3 months, 3 to 5 months, bearish continuation down to the 122.02 area. So your downward pivot point through the balance of the year would be a settlement. Now, for the month of August, it's at 126.08. We're not going to get down there between now and the end of August, but we could, quite conceivably, settle below this 127.12 formation by some point in September. And in fact, as long as this high holds, the low is 127.04 half for the month of August. That's consistent with this channel structure. In other words, if we were to settle below the low of the move high, for instance, that would be bearish in and of itself. But closing below this channel structure at the end of September is an indication the market has posted a good annual high, and we should then see the market slip south back into the lower 120s over the following months. Let's go back to the bullish scenario that if we were to settle above 131.10 at the end of August or above 131.08 at the end of September, then we're expecting a retest of that 135.15 high from 2012 within 1, 2, 3 months at the most, where we could double top really through the balance of the year. And so that's a very respectable resistance area. But honestly, this channel structure, if violated, if settled above at the end of August, above 131.10 or above 131.08 at the end of September, I don't know if we will actually continue into the upper 140s, but just so you know, that would be a clear possibility. And if obviously that happened, we're talking global recession. There's no doubt in my mind that that would be what's at play. Now, closing above 131.10 at the end of August, is that global recession? I would not. That's a pretty bold statement. I think what it essentially means is retesting the 135.15 high. I think recession would be in the air. We actually may have a quarter or two of negative GDP growth, which is the definition of a recession. But things really get ugly economically if we take out this 135.15 high on a month-by-month basis. So I'm getting way ahead of myself here. Anyway, let's talk downside. I showed you a moment ago a former channel structure in the 122 handle. That is also, we've got this other channel structure that goes way back in time at 118.28, all the way to the back to the origins of this contract in the early 80s. So, I'm not about to say we're going to test 118.28 anytime soon, but just so you know that this 131.10 structure is so significant that we could rotate south once again over the next, say, full year of activity or less back into the 118.28 area. That's how meaningful this 131.10 channel structure is, once again dropping to 131.08 in the entire month of September. And that's all really that I have to say for this particular 10-year Treasury note.